Welcome, ladies and gentlemen. Oh, what a time it is in the marketplace. Bitcoin has done, I was going to go live on the Friday, but I couldn't do it, ladies and gentlemen. I had to sort things out my end, but nonetheless, it has made a bit of a tricky move to the downside. And as we are speaking right now, it's not looking, it's slowly climbing up. But nonetheless, ladies and gentlemen, welcome back to this week. Monday. It's going to be a quiet day today in terms of news announcements. But what we're going to do today is we're just going to cover a few things that are coming to attention. And that is we are getting closer and closer to that Fed rate cut. Bond traders are effectively trying to work out, are we going to get a nice chunky cut? Word is that 50 basis points may be on the card, but the bets for that might not be coming through. But more importantly, this week, we've got the CPI data coming out, so that's going to be an interesting one. And they're projecting it to come in lower at 2.6% year on year, which isn't bad, really, when you think about it. But they're actually saying that the Fed may have left it a bit too late to start cutting rates. So, in other words, regardless of whatever the Fed does, the market might not like it. You see, we've got this tricky situation. If they cut too much, then investors are going to then go to a fight-to-flight safety mechanism. In other words, they need to pull their money out all over the place because of how aggressively they've cut the rates. Now, they're talking about nearly a 3% cut by the time we get into mid-2025. So that is quite a big cut overall. But historically, we know what happens when the Fed does cut the interest rates. And I'm going to be showing you this as we get into the live today. We're going to be talking about a number of things. We're going to dive into what the story is with cryptocurrency. What will happen if Kamala wins? What will happen if Trump wins? And I want to know where your heads are at with it. Because if Kamala wins, well, that's going to be a very interesting story. If Trump wins, that too will be an interesting story. But nonetheless, I'm seeing everyone across X doing my usual research and what have you. Everyone wants Bitcoin to take a slump to the downside. Bitcoin won't make another move for another 10 years and what have you. Yeah, let's not get it twisted. We are going through a transitionary phase in the marketplace. We've had non-stop economic expansion. We just come back from COVID, and that was a complete wipeout. And then non-stop for 2-3 years nearly, we've been pumping up. NASDAQ and S&P have been making significant highs. Fed's been increasing the interest rates. Manufacturing sector and the economy has been completely blowing everyone out the water and performing in ways that the markets just cannot anticipate. So when's it going to stop? Today, we're going to break it all down. And for anyone that's involved in the stock market as well, I'm going to highlight a few things that you want to be paying attention to when it comes to these sort of scenarios when we've got interest rate cuts, data coming out, and whether or not you should be looking to get interested in buying stocks. You really want to be paying attention to a few things, and we're going to be talking about that in today's live stream. On top of that, we'll dive into a few price projections that have been rolled out. We got 32K Bitcoin, we got 90K Bitcoin, we got 150K Bitcoin, we got a 9K Bitcoin. So when you start seeing all sorts of price predictions coming out, you can kind of work out that the market has no clue what is going on, which is true. You're trading the realm of uncertainty, ladies and gentlemen, and we just don't know what's going to happen next. But we're going to be here for the ride. So if you are new to the channel, welcome back. My name is Tino. I hope you're all doing well. And with that being said, let's have a conversation, gang. Here we go. So the bond market rally. What's the story here? Well, look, man, when the bonds market starts to go up and things are good, it tells you that the stock market is effectively a place of high risk and the bond is a place of low risk. All right. And when we see the bonds rallying, it tells us that investors are trying to plow into the bonds to lock in some rates because they just don't favor the longer term. Let me draw your attention to what's going on across the board with it all. So in front of you is the 10-year, 3-month yield spread. This is very important for us. Why? Because this effectively tells you the difference between the 10-year bonds and the 3-month bonds themselves. So it's effectively compared the spread between a 10-year and 2-year bonds, and the yield spread between the 10-year and 3-month bonds can better reflect changes in policy interest rates. The 10-year 3-yield spread is used by the Federal Reserve in recent years as an indicator of an inverted yield curve and recession. So just lately, we've seen the yields on the 2-year and the 10-year invert, so come away from inversion. So they've effectively flattened out, which means that the 2-year yield itself, there we go, the 2-year is trading lower than the 10-year. That's good news for us, ladies and gentlemen. Okay, hold on a second. Did that just tick back up? Yes, 2-year is trading lower than the 10-year. So 2 years at 3.68%. And the 10-year is at 3.73%. That's all good. So the yield's effectively flattening out. So what does that tell you? It tells you that investors are now starting to put their money into longer term dated securities, okay, fixed income securities, because they want to just lock in low risk environments because they're not liking what things are looking like in the near future. Now, when we go back into it, all you can see in this chart here, it shows that the 10-year, or should I say the 3-month bond, which is the red line right here, is trading above the 10-year. That's no good for us, ladies and gentlemen. It's no good, which means it still shows that investors are still favoring the shorter term rather than the longer term, even though the 2-year yield is trading lower than the 10-year yield. All right, so we've got a little bit of a mix match going off in the bonds market. Going over to the bonds, and if you're new passing through wondering why is this guy talking about the bonds, well, you would really want to pay attention to a $140 trillion marketplace. So that's going to help us understand if Bitcoin's going to get any of that piece. So with that being said, going into the 10-year, you can see the bonds are looking like they want to rally, okay? With that being said, you've got the NASDAQ looking very poor, ladies and gentlemen, which takes us into what we've got to be very careful with. On Friday, the NASDAQ itself took a bit of a smack to the downside, 2.55%, and we can see that the distribution days are starting to account on the NASDAQ and the S&P. What do I mean by distribution days? Well, if we open the charts right here, I'm going to sneeze, forgive me. This is in front of you, well, we can look at the QQQ, but let me just look at this in a second. NASDAQ composite itself is showing quite a few distribution days. And bottom right here, you can see purple bars. Those are days where institutional investors are effectively offloading on their positions, all right? And when you start to see a collection of those, and then you look at price action, you tend to start to think, hold on a second, what's the story? Is everything starting to pull back? We go and do exactly the same thing for the S&P itself. And the same story is there. S&P is starting to pull back, and it's pulling back on high volume. And that's not what we want to see, ladies and gentlemen, to be frank with you. Now, going into that, you can see here, 507 stocks were down on Friday, which is not good news. But then again, when it's all chaotic across the board, is that not a time to start buying? It's true. Naturally, you're going to think now's the time to start buying. Everything's on a discount. Now, Tom Lee and Peter correct 10% in around 8 weeks' time. Now, this was done from last week, so there's 7 weeks left. So add all that together with the rate cut and then the actual election itself. So that does fit in line with his prediction, which means that anything that's coming down right now could be deemed as a discount. Bringing it back into some other flavor for you. Check this out. The leaderboard that is presented by Investors Business Daily talks about how many stocks are currently near a buy point, okay? So that means they've been consolidating and they're getting ready to see a buy point, which effectively is like a breakout area for stocks. Now, this isn't to just take whatever you're seeing on this chart, on this screen, and just going with it, all right? Look at what's actually trying to break out. So you've got e-sign. Well, let's just start at the top here. DVA. What's DVA? It's kidney dialysis service. Health and medical, okay? What happens during recessions and all of the economic downturns? Biomedical and health, anything in the health sector, medical, always tends to do well during those times of uncertainty in the stock market or in the economy. Aerospace and defense, they always do well during these times. And this stock right here, DVA, is looking like it's trying to break out. Next stock, FRPT, fresh pet. Animals, foods, retail. So New Jersey company makes fresh pet food sold in nearly 27,000 stores. They look like they're getting ready to break out. $135 a share. Happy days. Now we go even further. Make My Trip, retail. No surprise to have seen the India-based online travel firm starting to break out. Well, maybe because people are getting ready to go away. Maybe it's that time of year. That's naturally what we expect, okay? We go into Now. ServiceNow, company enterprise software firm. All right. It builds digital workflow company. So people are working from home. People are evolving. Companies are doing different things. They use this company's service. XLU, what's this? Utilities company. Okay. So what are you getting from this, ladies and gentlemen? Agno Eagle Mines. Okay. So gold is near its all-time high near enough, and silver's near its all-time high nearly. So mining companies are coming up. And ESNG, what's this company? Provides skilled nursing at home care and rehabilitative services. Okay, so what don't you see there? You don't see any of the big boys. No Microsoft, no Google, no Meta, no Amazon, no Nvidia, no Nike, no Intel. None of the big boys are breaking out. And when you do see these sort of stocks looking like they want to break out, it may be a short-lived moment. So you want to pay attention to what the big caps are doing, because if the big caps aren't making no movement, then how are you going to expect these caps to effectively make a move? Because naturally, if the big caps are dropping and these guys are outperforming it, there's going to be a time when they're actually going to follow suit. It just takes more money and more time to get rid of positions in Amazon, Apple, Nvidia, because they've got such large market caps. So if you are dealing in the stock market, ladies and gentlemen, just take that into consideration when you are looking to invest, okay? Quick snapshot about all the cryptocurrency stocks that are listed on the stock market itself. We've got here Coinbase, everything that's involved in cryptocurrency on the stock market is listed right here. Let me know if I've missed out a few. Just comment below if there are any stocks that I haven't mentioned on this. But you can see they've just taken a smack across the board. Okay, so we kind of understand that the stock market is reflective of where we are in terms of the macros that are developing. But then we go into other macros like this, and then we say to ourselves, okay, what's the story? The probability of a recession in a year based on the 10-year, 3-month model, which is this thing right here. Where is it? Where did I have it? I just had it a second ago. No, it's this. Based on this stuff right here. Remember, when the yields invert, it's a recession indicator. Forget the SAR recession indicator for a minute. This is based on that. Now, you can see it's showing that we're at a 61% chance of the US going into a recession in a year. That's not good, ladies and gentlemen. It's not nice for the economy. And then we go into something else. Look at this. Stock market. Look at what's going on. Can we justify that there's a recession starting to happen? Check this out. Now, I've not included the rest of the stock markets, okay? All I've got is US, China, UK, and Taiwan, all right? When Taiwan slows down, that's when things start to get a bit interesting because everyone is exporting from Taiwan. China's exporting out to all of the countries around the world, right? Because it's what? Electro semiconductor. Everyone needs a graphics card. Everyone wants to mine Bitcoin. Everyone wants to use AI. And that's where we are. Taiwan is starting to pull back ever so slightly, if you can see it. Okay, you've got the UK, which pretty much is flatline. They're too busy doing madness over there. And then you've got China slowing down. And then you've got the US just maxing out at the highs. In other words, when money around the world starts to slow down, it's more than likely going to slow down in the US as well. When you start adding other stock markets as well, you can see that things are starting to get a little bit interesting. Okay, everything seems to be flattening out. And if there's nothing to trigger the interest rates or to get people to start borrowing money again, then that's going to cause a little bit of a problem, which leads me over to this story right here. You've seen me talk about this, but this is an article from the FDIC Insured Institutions Report, which shows that there's been a net income of 71.5 billion in insurance. Okay. It says net income increased from the prior quarter, driven by lower non-interest expense and one-time gains. Okay, so community bank net income increased quarter over quarter. All right, so without diving too much into this madness, okay, I want to just draw your attention to something, okay? The FDIC chairman, Martin Gruenberg, has said the following. The banking industry, let me just bring this up for you so you can understand where we are. He says here that the banking industry continued to show resilience in the second quarter. That's fine. Okay. Net income increased and asset quality metrics remained generally favorable. Okay. However, the banking industry still faces significant downside risks from uncertainty in the economic outlook. Okay. Market interest rates and geopolitical events. Fine. In addition, weakness in certain loan portfolios, particularly office properties, credit cards, and multifamily loans, continues to warrant monitoring. Okay, so what does that mean? Well, it seems like we've got a bit of a credit problem coming into play. Okay, look at this. Commercial bank interest rate on credit card plans. all the way up there. That's not healthy, ladies and gentlemen. Nah. That's why the Fed needs to cut the interest rates, because it's just too bloody expensive. Okay, to top that off, you got this chart right here. Delinquency rate on loans starting to creep up, ladies and gentlemen. We're going to get another subprime mortgage crisis again, but credit's always been the same story. People borrow it, they can't pay it back, and then what happens? The government bails everybody out. Happy days. And this is where it starts to get a bit interesting, getting into cryptocurrency. I need your thoughts on this. This is nuts, but Bitcoin could sink to 30K if Kamala Harris wins election, says Bernstein. Where are your heads with that? You can take whatever system you want and utilize it, but fundamentally, how many of you would be of the belief that if she wins, Bitcoin will slump to 30K? It'll be very interesting to see what you guys have to say, because, you know, Bitcoin's following the stock market and all that fun and games. The idea is that this could be a problem, especially with Gary the Egg Gensler, Treasury Secretary. If she does win, that's going to be a sore thing for crypto. That's just pretty much the passport for Gary to go in and say, security, 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 fine, 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 fine. Off you go. Fear, 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 fear. And then people are going to be looking in crypto like, everything's really cheap. Yeah, but there's a reason for it. Why is that? Gary's in charge. Ooh. Yeah, let's just stick to the ATM markets in the UK and let's just go buy some penny stocks. At least we know where we stand with those guys. So it's going to be an interesting one if she does win. But on the flip side, ladies and gentlemen, if Donald Trump wins, Bitcoin's going to smack to 90K. So where are we at? What's the story? Right now, you're effectively trading the idea of ideology, in the sense where, what would it look like if Bitcoin, or should I say Trump, comes into power? Do I like the idea of that? What would it look like if Kamala goes into power? Do I like the idea of that? Okay. And that's effectively what we're waiting for when it comes to cryptocurrency. But to back it all up, we got this story here. Global crypto investment products record largest weekly outflows since March, totaling 726 million. Not very good. In the ETF front, you can see that we still got some relatively hefty balances by BlackRock and Grayscale. And Grayscale's always been just getting rid of this thing. And we've seen some late sales coming into play. Obviously, that was done 3 days ago, but no activity is coming into the chart itself. But it's one of those ones, ladies and gentlemen. You got conflicting stories. I mean, you got here, Bitcoin whales gather 157 million Bitcoin in the market dip. Bullish signs. It's all optimistic, isn't it? And we're going to get to the chart in a short moment, ladies and gentlemen. And then we've got this story, how a 50 basis point rate cut could raise alarm for Bitcoin. What? That's a bad sign? Well, think about it, ladies and gentlemen. Your dollar's expensive right now, okay, to borrow. Naturally, when the rate cut comes into play, we're going to be expecting the yield on the dollar to come down. That means that we can now borrow more dollars and then put them to work. But let me just draw your attention to something. This chart right here. This chart is effectively the federal funds rate versus the S&P. Now, in front of you, you can see the red is the federal funds rate. When the funds rate gets changed, you've got what is called a Fed pivot. And then what happens? Stock market's rallying towards the Fed pivot. Bang, it drops. The interest rate starts going up, rallies and rallies, and then it stalls for a little bit. Then it drops. Then we've had this mad move to the upside where there was a slight correction in the interest rates where they did change it and the Fed pivot got put into play, and then it drops. Now we're at an even higher peak in comparison to where we were at 2006, 2007 and 8. We're in exactly the same 5% region again, and the stock market is at significant all-time highs. So if the stock market follows what Bitcoin does, if Bitcoin follows what the stock market does, then the logic says that we're going to see a little bit of a correction. So then that leads us over to the charts itself, going over to the NASDAQ and the S&P. I mean, could you say it's starting to roll over? We're in exactly the same spot as we were before over here, okay? But we don't have an interest rate cut. At this point right here, everyone was pumped that the Fed was going to keep the rates high. And they were like, oh, it means money is going to be expensive for longer. Okay. Yes, principally, that is true. So if money is expensive for longer, then that means people are going to want to retain more dollars. Okay. And then they put those dollars to work. Now, as we've gone into the charts and we can see that we're now getting the light of a interest rate cut. Sorry, we know we're going to get the interest rate cut. How much of it is going to be the big question? We're at significant highs right now, which could then make us believe that the NASDAQ itself could be getting ready to roll over pretty aggressively, which is in line with Mr. Lee. He said, okay, so 10% from there. Well, let's just say 10% will take us down to this low right here, 10.69%, just to say. All right, from the current price, that's where the NASDAQ in principle will end up, which is around 16,645. Take that logic and go over to the S&P. What does 10% look like on there? Take that price point, drop down, 10% will take us down towards this area, just below the 5,000 mark. Okay, that's fair enough. I'll take that, put that there. Happy days. So what would 10% look like for Bitcoin? The question is, will Bitcoin move 10%? Now, I'm talking and I'm not showing you what I'm talking about, but the idea is as follows. That's what 10% looks like on the S&P, and that's what 10% looks like on the NASDAQ. Okay, so what does it look like on Bitcoin? Well, I don't think Bitcoin will drop 10%. I think Bitcoin could drop even worse than that, which is why some of you are actually talking about audio. Why am I lagging? Why is my lagging? I can't be lagging. Mike, is anything wrong with my audio? Surely it can't be lagging. Why is it lagging? It doesn't make sense. Sound check. Can't be. Can't be. Sound is disappearing. No lag, bruv. You're all good. No, it's good. Audio's fine. Man, winds me up, that does. I read one comment. Sounds cutting. Okay, it's good. No lag. All good with the audio. Happy days. Yeah, listen, if there was a problem with the audio, Mike would be letting me know and say, cut that stream. No call from Mike. We good. So, back to it. What does 10% move? Thank you, everyone. What does 10% look like for Bitcoin? 10% from this current price point, ladies and gentlemen, puts us down here. So you're saying to me that Bitcoin can only drop down to around 48K, given that the stock market could effectively drop down to drop 10% to some really significant levels. So the question that I'm going to be presenting to you all is this. Is Bitcoin done? I've been seeing a lot of you saying that there's nothing going to happen with Bitcoin, not for a while just yet, okay? But you've got to understand, we're in evolving times. The markets are reacting quicker to corrections, okay? Let me show you what I mean. Look at where the NASDAQ itself has been correcting, all right? So let me just bring this up for you. Can you see these interest rates increases, and then they stop increasing interest rates and they cut it, right? Fed pivot. They dropped for a little period, and then they just shot back up again, all right? That drop right there was the crash of 2018. Now, if you remember 2018, and if you were paying attention to this company right here with the Federal Deposit Insurance Corporation, they were effectively releasing data that was showing that the unrealized profits and losses of banks, they were at a loss of $252 billion in 2018, okay? The Fed cuts the interest rates, the market corrects. We're in exactly the same situation right now. But this time, unrealized losses is now to the sum of 512 billion. And we're going into a Fed pivot, rate cut. I mean, if it doesn't repeat itself, then, ladies and gentlemen, the market has got more resilience than ever. And there's nothing we can do about it. But historically, when the money is there saying it's at a loss, and there's a lot of it at a loss, historically, the markets are going to correct. Does that mean it's all doom and gloom? Not at all, ladies and gentlemen. You just only got to go over to Bitcoin and ask yourself how well Bitcoin has been doing in this range. Okay, like I said, negative articles are coming out with Bitcoin. Looking at this, say global output, global crypto investment products witnessed 726 million leaving cryptocurrency. That's not a problem. If we only go over to the actual market cap for cryptocurrency, and we can see what the story is. Total market cap for crypto is now $1.92 trillion. All right. I mean, it's a small amount of liquidity when you think about it. You want liquidity, you go over to Nvidia, with Nvidia's around nearly 3 trillion, just now 2.5 nearly. So it's nearly double what cryptocurrency is. Well, not just double, but you know, it's way more, and that's just a stock. Okay. And given that cryptocurrency has had so much hype around it, you would think that it was way more than that, which is really frustrating to say the least. But looking at it overall, ladies and gentlemen, money looks like it's leaving crypto, but technically it's not, okay? Because they are buying up as much of it as possible. In front of you, ladies and gentlemen, we do have a particular zones that you want to be paying attention to. You got 37 million Bitcoin at 47,155. $37 million worth of Bitcoin as an initial order, 800 BTC, okay? When we have a look at Bitcoin from the perspective of the depth of market and TPO and what have you, you got to say to yourself, well, where do we expect Bitcoin to end up? Now, if we just zoom out, the best way for you to use this, these are initial balances, but the best way for you to look at this is to see where value is moving, okay? Where do you see value? Well, the point of control is on the assumption, which is this red area here, is where people believe that, well, where people have been engaging in price action at this point. So even if you were to just pull Bitcoin up on the higher time frames, so let's just take Bitcoin on the daily and look at it on the 1-day chart itself, and then we change that, zoom out. I mean, it's not enough data on there, but I'm going to change it so that we have got effectively 90 days. Go to the 1-day chart right there. And we're going to have a good look at how it looks in terms of Bitcoin's value. What are people feeling about Bitcoin? So let me just wait for that bad boy to just get done right here. I know it's not really doing too much. Just quickly have a look at Solana, how she's doing. Ethereum still staying sideways. And here we go. So where is value? Of course, my tick chart is not exactly appropriate right now. We need to increase the ticks, get them up so that we can have a good look at the volume profile itself. Now, just by looking at the red lines, as you can see on this chart, I don't know if can you see it? Yes, you can. Okay. Looking at the red lines, these are what you would call the points of control. Okay. Now, the points of control themselves tell us that there's more of what? Buyers or sellers at those particular points. So if we just zoom in, you can see here that the TPO itself is showing that the point of control is right there. You got a point of control right here, and you got a point of control right there. Now, what you're looking for, in essence, is the point of control to suggest that there's value being changed. So what do we see? We see Bitcoin coming down. So value is ending up lower each time. But as we're going down, value is trying to end up higher. You see these two areas here? Those 2 points right there suggestive that that's a point of control, which means that there's a lot of buying and selling at that point, and it was exactly the same at that candlestick. Even though that candlestick closed lower, we could then make the assumption that that's where people are selling, okay? But they're buying. And then what we're looking for is we're looking for the change in value. So when the change in value comes into play, which means that the people who are buying Bitcoin inside these ranges believe that Bitcoin's price is going to end up higher, they're going to start planting their orders above here to effectively sell. Okay? And there's a $20 million order up there at 58,590. So the idea is that we need everyone on X to start getting a bit optimistic about cryptocurrency. We don't want them to see prices going lower. We need them to be optimistic about crypto. Why? So that these dudes over here who have been buying can sell into people. That's what we need to happen for Bitcoin. The idea of value needs to be changed. And if people are negative about cryptocurrency, then they're just going to keep on buying and buying and buying until it gets to a specific point where they think, right, you know what? Now's the time where we need to start getting people optimistic about things. And Bitcoin will print one candlestick one day that will trigger everyone to start going crazy about it, and Bitcoin will just pump. But ladies and gentlemen, the week itself is filled with data, but nothing to be too concerned about. Why? Because you got the core CPI data, which is what the Federal Reserve uses as the main measure for inflation. And if they see that that ticks up, we've got a problem. But the year-on-year inflation data is going to be tipped at 2.6%. So round of applause for Jerome Powell for getting so close to that mandated target of 2%. But you've got the problem of prices as well. And if prices keep on going up, it means that whatever you're seeing in inflation is effectively going to go back up again. So it's just a time delay, in my opinion. Okay. I don't understand why sound is cutting out. I don't get it. I don't get it. Is everything good? Check the 2-year and the 10-year bonds yield. Market is going to start moving. This is correct. And that's something that you always want to be doing, ladies and gentlemen. Check your 2-year yields and your 10-year yields. As long as these start moving, and when these start coming down even more, then we're in good environments to start buying stocks. An economist, I've said this before, an economist, Mohammed Esri something, he said that when the 2-year yield gets below 4%, that is a sweet spot to start buying up stocks. But the problem that we've got, ladies and gentlemen, we are at significant highs with the stock market, and value, quite honestly, has already been priced into the stock market. Stocks right now are trailing at around 50 to 60% in value. Like, come on, man. The risk to reward element on the stock market right now is dead, unless there is something drastic that happens in the stock market that could actually bring it back up. Fed pivot historically brings it down. So we could be getting ready for a discount coming into play with everything across the board. Okay. And that's what we're going into for this week, guys. We've got the inflation data that's going to lead us to understand where the Fed is going to be. And in my honest opinion, if we don't get the rate cut that we want, I think by Wednesday, the Fed will know exactly where it stands in whether they're going to cut the interest rates higher or not. And that's a problem, because inflation ticks up higher, we ain't getting no big rate cut. 50 basis points, ain't happening. Ain't happening. What about the mass production of robots to our industries? Thanks, Tino. Mad love to you, Toby. When you say mass production of robots to our industries, like, yeah, people are, well, look, you'll always need people to do things, but you want to be getting involved in the companies that are making those robots. That's when the flavor is at. Tino, big man ting. Big man, yeah? Could they do exactly the opposite of what everybody's thinking will happen, like you just said? They probably could. They really could. The only one time that has actually happened with the Swiss franc and dollar, okay? It was on a Sunday night, and they were projecting that they were going to cut the interest rates a specific amount. They didn't. They did the opposite. The dollar just slumped, okay? Sorry, no, they said they were going to increase the interest rates, okay? And the dollar itself was going up against the Swiss franc, right? Then what happened? They said, nope, we're not. We're going to cut. Happy days. Bang. Dollar Swiss sank 300, 400 pips in a matter of seconds. If they were to do such a thing, the Fed, I'll tell you what would do it. If the Fed calls an emergency meeting before the 18th of September. If they do that before the 18th, you know things are hitting the fan quite aggressively. Okay? Any other questions? Oh, it's your internet. You say Bitcoin 30K is like it's a bad thing. Well, technically, it could be a bad thing for some people, because if you're buying Bitcoin at these highs over here, ladies and gentlemen, and that's what people are doing. If you're buying Bitcoin at these highs, which is what's been going on, all right? Even these guys over here have been loading up Bitcoin. Where is it? There's the article. Here we go, 157 million. Even those people that have been buying. We're looking at that thinking 157 million. Is that a bullish sign? Technically, it's not when you think about it. Because all you've got to look at, ladies and gentlemen, is how much market cap is actually going into Bitcoin. All right. And that's over a period of time. All right. So Bitcoin whales have accumulated 2,814 Bitcoin worth 157 million, driving trading volume to 37% over the past day. I'm sorry. It's not enough Bitcoin to warrant a move, given that how much they transact. Look at this chart here. Just even going into this as well on Exo charts, when you zoom in, look at this, just to put it into perspective, right? Where's Bitcoin's price? Where are you, bro? There we are. Just look at this. 600 contracts, 600, 888. Look, it's going up and down. Remember, this is all leverage as well. All right, we've got the opening range or the initial balance coming into play with Bitcoin. That's why you're seeing the A's coming up, okay? It's the first hour, so you really want to be waiting for that. Platinum members are going to be getting an update over to you very, very shortly, all right? But you can see there's lots of Bitcoin happening right there, all right? 2,000 Bitcoin. Well, we've got 1,000 orders here, okay? Contracts per se, but it's not enough. I need to see 10,000, man, to justify it. That's why Bitcoin shoots up, shoots down, then goes back up again, because the volatility is there, but the liquidity isn't. But we just get hyped up on Bitcoin being like $2,000, 2,000 Bitcoins being bought. Oh my God, let's just get excited about Bitcoin. Man, we need bigger money than that, and we need Wall Street to stop dumping it. We pay attention to that article right there. Where is it? 726 million outflows, but what the hell is that measly 100? So this is what makes sense. We are bullish on 157 million, but we don't really say too much about 726 million. Doesn't make sense. Ladies and gentlemen, if you've enjoyed today's live stream, be sure to like and subscribe. And I will be checking in with you all later on tonight to make sense of the absolute madness that we've got going into this week. Have yourselves a great day, gang. Mad love. Peace.